Hang Seng has slipped a little bit in the past few minutes, so that is down around 11%, but 11 points.
This is the first time that Tata Motors has reported a profit in the last 2 years.
The Fed needs to keep rates higher for longer than the markets are anticipating.
We have gone wrong on the guidance this year. And clearly the reason for that is the mobile business has been slow.
It's actually quite phenomenal that, like how easily we've transitioned, over the last 1 year into this T+1 settlement cycle.
The Nifty is absolutely flat, down about 15 odd points. The mid-cap index is trending in the green.
If you look at structurally, US growth and European growth will remain under pressure even going forward.
The big reasons why Q3 profits are good was also because material costs that came down dramatically.
Well, what I would say, Shireen, is that the mood is cautiously optimistic.
We have linaduramide sales as well as launches of a couple of good products as well as increased market share.
Well, we are hearing from our sources that budget 2023 could be about the middle classes.
These are the numbers as far as the individual Adani Group stocks are concerned, whether it's Ambuja, ACC, Port, and as well as Adani Enterprise.
Well, that was a day so far. Hello and welcome to a fresh new edition of Closing Bell, live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. In the studios with me here, Reema and Surabhi, and Nigel is joining in from the newsroom floor as always. Guys, hi. It's, I don't know if I should say it's a bit of a Black Friday, but it's got a slightly blackish hue, right? Red mostly across the screen. We've been, of course, continuing to cover the market from the morning. We're down 350 odd points. On the Nifty, at least, there is no real sense of a recovery. Bank Nifty is the other one which should come up on your screen. That is also pretty much languishing at the lows. 3.25% cut is where that is. For the Nifty, I mean, the 200-day exponential moving average comes in at 17,549. And I think, the low today was 17,517. Even as we speak, we are almost exactly 5 points away from that 200-day exponential moving average. It's almost, you're going to call it a Lakshman Rekha in that sense, between a bull and a bear market. But some use it like that. But it's a longer term average, which has been breached with the severity of the fall today. Close above it, some sort of a recovery above it, I think, gives you a sense that maybe the market lives to fight another day when we come back on Monday. But we'll see. It's pretty volatile out there. Stocks are moving around quite a bit. Guys, hi.
Hi. HDFC Limited, HDFC Bank are now trying to put in a bit of a fight. So there's been a recovery in these two names from the day's low in the last few minutes. Just some more levels. So one important level is the 200-day exponential moving average at 17,550. Below that, you've got the 200-day simple moving average at 17,290. And if you break that, then you go all the way down to that September-October low of 16,750. After that, in the month of October, November, we had that big rally and the Nifty went on to hit those all-time high levels. So 16,750 will be an important level to track. In the last 2 days, the Nifty is down 550 points, while the Nifty Bank has lost 2,300 points. That's the extent of fall that we've seen. And just look at the kind of earnings reaction we've had today. Dixon down 19%. Indus Stars fell sharply on Wednesday. It's followed it up with another 13% fall today. When was the last time to an earnings miss you've had such a sharp reaction? That just tells you the mood in the market. That said, not all gloom and doom. You've got the auto names, Bajaj Auto, Tata Motors, clocking in gains of 9 to 10% for this week. So they're unscathed.
Well, that's true. I'm trying to be a little optimistic, guys. It is Friday, for what it's worth. I'm trying to look at the positivity, even in the banks. I mean, the kind of shorting that's going on, who knows if it's a no-pain budget or it's just a relatively moderate budget, then maybe, all the shorts will run for cover and things could look very, very different come Wednesday next week. But we still have a couple of trading sessions to go before that. Those are the losers in front of you. Pull up the Adani Group. It's still a big crunching fall in a couple of the smaller Adani stocks. Adani Green, Adani Total Gas, Transmission, etc. Most of them, Adani Enterprises down 15%. Adani Ports, pull up the intraday graph. There's some semblance of a recovery. There's a bit of a fight back that's going on compared to the lows that we saw around afternoon, around 1 o'clock. But final two or three sort of figures for you. The fall in context. This year, January so far, the market's lost about 3%, Nifty level. 2.6% of that fall has come just this week. That Nifty Bank cut of 6.2% in January over 5% has happened this week, and it's just 4 trading sessions that we're talking about, given that yesterday was a holiday. So, well, it's been a crunching week, I think, to say the least. Nigel, hi.
Well, hi. We could easily have a 60, 100-point recovery from the lows, but that, will not be really very encouraging even if we get past that. I'll tell you what, the markets in the near term have moved into a sell on rise mode, and that's likely to play out till we take out the recent support levels. Well, they'll become resistance levels right now. So the recent support, which was at around 17,750, well, that was a support. Now that becomes a bit of a resistance. So till we get past that level, then you'll be feeling a little bit confident. And on the Nifty bank, 41,500, we went there numerous times, but we broke that, and now we've broken that decisively. So sell on rise is what the market is likely to play out, for the next couple of trading sessions. Till we get past those resistance levels, very, very importantly. But don't rule out maybe some bit of a relief in the final hour of trade. Let's see how this one swings. Prashant?
No, absolutely, Nigel. So it's volatile and fluid out there. Jonathan Sheasel is joining us now of Westminster Asset Management, and Rohit Srivastava of IndiaCharts.com. So we'll get you a fundamental take and a technical take as well from Jonathan and Rohit respectively. Guys, good to have both of you here. Let me come to you, Rohit, first. Does today's price action, I know you were tending towards being bullish or turning bullish. What does today's sharp price action do? Where does it leave us?
To tell you the truth, it makes you even more bullish. I know sentiment is completely the opposite on the street, but then buy low and sell high is always easier said than done. So you go by data points. If you look at sentiment, it was already negative, and something like this probably puts it in the cornerstone of extreme negative. So everybody is bearish on the street, and that is a good reason to be bullish. Now we can look at setups. For example, the number of large cap index stocks that are trading with daily RSI readings below 30, which means getting oversold, are many actually. It's all of them, like State Bank, Reliance, Kotak, ICICI, Bajaj Finance, Bajaj Finserv. I'm taking out names, right, which are showing up on my filter right now. Axis Bank, Asian Paints, all of them. RSIs are sub 30. Sub 30 readings for large caps typically very quickly turn around into bounce back. So this is happening now simultaneously across the board. And on the sentiment side, what we've been discussing is the volume of puts to calls has been very, very high. Similar data point was there for the US also at the start of the month. They've recovered. We haven't. We are still seeing the sentiment remain in a negative extreme. And that is the reason why I think we are now at the end of this correction, which started in the from December onwards, rather than at the beginning of something. The news flow, of course, makes it feel worse. But like I said, sentiment always gets extremely negative near the lows, and that's the reason to really remain positively biased, especially for medium to long-term investors who want to, pick into the market. Such sell-offs are very good buying opportunities. I mean, one of the reasons why this selling happens, at least on the leverage side, is imagine all the people who are leveraged long in Adani stocks. When they sell, they have to book losses, and they have to make up for those losses by selling stocks from their DP. And that is sort of why you get across the board selling, which people don't really realize why everything else is selling off today. It's essentially people need to book and pay for those losses, and that's what ends up happening, and that's where panic gets created. So this is the same according to me.
Rohit, it's encouraging to hear you because you're sounding a little bit optimistic that, we are on the verge of maybe a bit of a turnaround. But tell us, if someone wants to buy, what should they buy? And on the index, do you have a call? Now we're closer to around 17,500 odd. In fact, I think we just touched that level and we're bounced 15, 20 points odd. So on the index, what's the call?
Yeah, so this level, earlier I think Prashant was talking about 200 DMA. It also coincides with a 61% retracement of the entire rise that we've actually seen in the Nifty. Okay, so we reached a 61% retracement. Bank Nifty slightly away from 61%, which would be at around 39,947. For Nifty, it was at around 17,560, just slightly below that. So plus or minus of these levels, it is a pretty good point where we start thinking that, the entire rise from October has retraced 61% is a good support point. So those are particular levels on the index. In terms of sectors, you look at the strength. I mean, two of the sectors which were the weakest sectors of last year, metals and IT, are holding out very, very strong today. Don't look at the Nifty Metal Index because it has Adani stocks. Look at the BSE Metal Index, which doesn't have Adani stocks, and then you can see the relative strength, in those sectors actually showing up. So I think those are directly two sectors that I would, get interested in.
Interesting. Hi, thank you very much for joining in. Jonathan, my question is to you. What a view your investors made of the Hindenburg research on Adani Group and the impact that's had on the market?
Hi. Yeah, I think it's clearly had a huge impact on the market. I think, we've been living in for quite some time an environment where there are quite a few short sellers reports out there. I think, India certainly has gone down a promoter-led model, has done for many decades. And from time to time, clearly there's going to be reports on out there that could potentially have an impact. I think anybody who knows the Indian market has been operating in it for some time. You sort of take these risks on board as such. But clearly, India has been, from over the last few years anyway, compared to other emerging markets, been a tremendous outperformer. And so I think it's been used as a bit of profit taking. I would also agree that, probably the bulk of the pain for the index has happened. But obviously, when you also consider that India has outperformed the likes of China so significantly over the last couple of years, the dedicated emerging market investors probably have been pulling money out of India and pushing it back into China. So I think probably most of that move, or a good chunk of that move, has already happened. So I wouldn't get too despondent. But yes, the Adani Group report probably will continue to have an impact for some time longer.
Jonathan, hi, good afternoon. Of course, Adani is catching all the headlines, but let me ask you this. Are there reasons or perhaps triggers behind the sell-off? Now, if at all it's budget nerves, and there's a lot of talk about how perhaps this year before the general elections, we'll see some sort of a cut in taxes, personal income taxes. Is that going to be well digested by the market, or is there some fear around populism? What's your sense? I mean, what threat does the budget present, if any at all?
I think certainly from our perspective, the budget over time has become less important. Yes, the media does like to, it's a great news story, and clearly there'll be some sectors which it will be very important to see what happens in the budget. But the reality is, from a market perspective, over time it has become less important. But it is, a good headline. So from our perspective, we don't attach too much noise or too much attention to the budget.
Okay, fair enough. Point taken. Rohit, as a technician, you buy strength and you sell weakness, right? You began by saying buying low, selling high is difficult. That's the fundamental analyst in you speaking. And of course, I mean, the data points you highlighted are all great. Just looking at price action, I mean, is it fitting within what you track in the Elliott wave pattern? I mean, what is it telling you? Just pure price reading.
Yeah, which is why I highlighted things like the retracement, right? We are at 61% retracement in the Nifty, slightly away from it in case of the bank Nifty. So these are potentially good levels once you consider that the trend is up, So it's all about mindset. If you think that the larger trend is up, you look at 61% as a good buying point. If you think that the trend is down, you will expect every level to break. So that always comes with what mindset do you take. The other part is really sentiment, So sentiment is the only thing which allows you to buy high and sell low. It's really not fundamentals. I think even if I ask fundamental analysts today, they would be panicking. So I've seen that time and over again. But you have to make that call that has sentiment reached far enough where a wave structure also completes. Because if you look at the fall from December, it's a complex structure. And if you ask me the breakdown of the last 3 days fall, we are in the 5th wave of this fall that started 3 days ago. And it's just not confirming that it is complete. Now, even if I go to an hourly chart, the RSI on the Nifty is now 15.5. That is extremely low. It's not even in the 20s. It's gone to near double digits, not single digits yet, but somewhere there. So it's very, very oversold even on an hourly chart. Okay. But again, we are waiting for that final confirmation that this 5-wave fall is complete, which would at least require a positive hour of trading, which we have still not seen. So tick by tick, we are watching for that at the shortest time period.
since I have you and I know that you look at sort of market reactions around important events, etc., you have in the past. The budget is next week, right?
Yes.
Anything you want to kind of bring in there? You looked at market performance into post.
Yes.
Yeah, go on.
So there we can go into a dozen of budgets, and the beauty of Indian budgets is they've always made sentimental highs and lows. So whenever you've seen a market that has been, say, rallying for 2-3 months, and you continue to run up into the budget, even if it's a fairly good one, you find that the markets peak out because everything gets discounted. Similarly, we've seen periods where markets have fallen. For example, 2016 February. The entire year of 2015 was down, and then on the day of the budget, we actually bottomed out. So the opposite is also true, that if markets are either falling or consolidating ahead of the budget, we have often seen post-budget rallies simply because all the negative gets priced in, and even if the budget has nothing negative, the market says, well, there was nothing negative, so let's go up. And if there's something positive, then all the more it tends to go up. So it has worked as a very good turning point for markets based on what goes on prior to the budget. And now this fall actually sets us up for a 2-month decline, which means we are in a down market ahead of the budget. So purely on that thesis, I would think post-budget it gets even better.
All right, Rohit, if someone is taking that contra call on the index, and since we're at those crucial support zones, when does this view get negated? I mean, where should the next level, or when does this contra buy strategy get negated?
So there could be, I've announced retracement. We would be at one of these retracements. We would start, feeling that, something's not right enough for us to stick to it. Say 66% retracement would be around 17,475. So that sort of gives us a little bit of room to think about this. I'll give it a day or two. If it doesn't work out in a day or two, I would have to rethink this strategy. So in terms of time and price, that is what I'll look at.
Sorry, what is that level, Rohit? What is that level?
Yeah, 66% is 17,475.
Retracement of which rise are you talking about? From the
September, October bottom, yeah. Which is
the 16,750.
Correct.
Okay, all the way to the high. Got it.
Okay.
Got it. Surabhi.
Jonathan, just a word on banks. Would you buy into this weakness, or do you think they've kind of run their course for a little bit, given last year's rally?
Yeah, I think you're probably right. The banks, certainly when I put my hat on from a foreign investor perspective, the banking sector is one that you have to own. And it did well, as you say, has had a good run, probably needs to consolidate a little bit. But certainly for anybody looking at India from a medium to longer term perspective, needs to own some of the good quality banks that India offers. And yeah, if these banks keep getting sold off, then perhaps these are probably good buying opportunities for a medium to longer term investment. But from a sector point of view, it's a crucial sector for all investors. Big sector, and you get a lot of exposure to broad aspects of the Indian economy within the banking side.
Okay, all right. Thank you so much, Jonathan, as well as Rohit, for stopping by and giving us your view on the index. Appreciate you guys stopping by and filling us in. For the time being, though, we'll slip into a short break. On the other side, we'll put the spotlight on the Adani Group as the stocks take a beating post that report coming in from the research firm that predicts a sharp downside to the stocks. We'll analyze a couple of the cement names with Rajesh Ravi of HDFC Securities. Devin Chauksy as well will be joining in of KR Chauksy. We'll discuss a couple of those stocks as well.
It's 17,500 on the Nifty. The 200-day exponential moving average, which was at 17,550, has been breached, and we're well below that. 17,500 now approaching a 400-point knock on the Nifty. The sensex lower by nearly 1,100 points. We were looking at some recovery in the Adani Group names. So the Adani stocks are recovering, but the markets are moving southwards, and that journey continues even now. Devin Chauksy is with us on the show, and we've also got Rajesh Ravi of HDFC Securities. Devin, what has happened today? Could you tell us what you've picked up? Are you seeing a lot of people who are trapped? Is there, margin calls which are being triggered? What has happened in the markets today?
Well, I think on first part, the panic got created because of a sharp fall into the Adani Group stocks. And I think the larger part of the fear kept in the minds of the traders was largely coming from a fundamental question that how could the instruments like non-Indian listed equities, I think, get traded offshore, where I think it is not, the volume is not getting reflected in Indian market, and how could I think that instrument result into such a massive short selling into the markets? Second fear which came out from the traders' mind was that suppose if today this particular this particular group of stocks have got victimized, how would the market take care of the situation going forward for other stocks? So these are a few questions started coming in the morning itself, I think, from the traders. And I think that probably, I think, ruled the mind of the trader with panic. As a result of which, I believe, I think the larger part of the offloading has taken place on the long side of the position which people carried. Remember that we are just 3 days short of budget. And as far as I think the market is concerned, possibly, I think this has also, I think, kept them nervous. And as a result of it, this sell has taken place. The second part of the fall, as I see it, I think came largely because of the pressure coming in on the mark-to-market side on the derivative contracts. Because of such a vast fall, including in the bank stocks, where the long position is created, I think that is where probably people are forced or traders are forced to offload the long positions. And that has also, I think, compounded the complete fall in the market at this point of time. So largely, in one line, one can summarize, I think it is a panic, I think, which has ruled the minds of the market today. And that is the root cause of this particular fall at this point of time.
Okay, by the way, the Nifty is down 380 points and Adani stocks, for example, have come under some more fresh leg. I mean, Adani Ports, for example, the low on Adani Ports was 540, which was made around 12:50, a little before 1 p.m. And then from 540, it rallied to 627. And then it's kind of sold off again to where it is now, which is about 590 odd rupees or so. And I think similar is the case with a lot of other names which did see rallies. I think Adani Transmission, Adani Green are some of the other names which did see small bounces, but which are getting sold into. Adani Transmission, maybe we can pull up. It got to about 2730, which is around 1250 or so. Like Adani Ports, rallied back to about 2960, 2970, and has now lost about 150 rupees very quickly to 2800 rupees once again. So that's basically what we have going right now. Rajesh Ravi is with us of HDFC Securities. He's, of course, he tracks the cement space, and Ambuja is in focus. Rajesh, good to have you with us here. Thank you very much. How would you characterize the fall? Where does the stock now come in your kind of valuation radar, your Excel sheet? What is it telling you? I mean, after the fall.
Yeah, hi, good afternoon. Obviously, the fall is quite sharp, given the concerns which have been going around for past 2-3 days. However, both ACC and Ambuja are in themselves quite well-managed companies, which is acquired by the Adani Group. And I don't see any business risk to these companies in terms of their market mix, their volumes, in terms of their profitability. They were already operating at very high utilization and were making decent profit margins. With Adani's taking over, there are thoughts and hopes and expectations that the company will gain both in terms of size as well as in terms of their operating metrics. It will further improve. Now, obviously, the bigger concerns which may be hitting the price for these companies would be the inorganic growth stories may take a pause, and maybe that is what the stocks are. The stocks have fallen sharply, because what is happening is that the broader thought which got the Ambuja re-rated was that it would be able to do acquisitions inorganic at say $100-$120 range, and which in turn would get re-rated at $180-$200 valuations, whereby the equity infusion supported that thought process, and the stock rallied one way closer to 600 rupees. So while the current fall in our view is quite sharp, given that Ambuja is a going concern company, and even if inorganic acquisitions do take a pause in the bearish case scenario, I don't see that should have a very big impact in terms of its organic growth plans which may only accelerate even before
Rajesh,
Adani.
Rajesh, appreciate your thoughts, on the group, but we're running a little short on time, Rajesh. You were in the minority camp that had a reduced rating on Ambuja, right?
Correct.
And you seem to have got it correct. Now the stock is close to around 100 rupees, lower than your target price at the start of today. Since it is so much lower, do you believe now that, you will change your stance at these sort of valuations? Will you be positive on both these two? In fact, the prices you're getting it is lower than the open offer price as well. Go ahead, Rajesh.
Exactly. So you're right, and the current price, and that is where I was coming to. The fall is quite sharp, and given that the franchise are well managed themselves, and it will only gain more strength under the new promoter. We see that these upsides, the stocks both have, ACC while itself was offering upside even then, no much change in the thesis even with the ongoing issues. Ambuja, even if the new expansions are delayed, we still believe this fall is unwarranted and the stock will spring up from here on. So our current target price is 480 rupees, which also premised on most of the expansions which we have built into it. Even if we cut short of those expansions, even then we believe the current price of 370, 380 rupees is significantly on the lower side. The stock should rebound to north of 400 rupees from here on.
Okay, so you're turning a little bit constructive at these prices. Rajesh, very quickly,
yes.
Ultratech versus ACC Ambuja, what's the pecking order between the three?
So among the three, I would still be positive on Ultratech because that is one, we have been telling this since long that they have been in this business, investing into not only growth but into refurbishing the existing plants and thereby and their distribution. So they are very aggressive both in trade and non-trade markets. They have strong, quality assets which they have refurbished, even the older ones. So we remain bullish on Ultratech among the three.
Okay, all right, Rajesh, appreciate you stopping by and giving us your view on the space as well as on all these three stocks. Thanks so much for stopping by. Well, Nimesh has joined me. Nimesh, what are you picking up with regard to market setup? As well as the Adani Group stocks, you're tracking a couple of factors. Run us through that as well.
That's right. So first to talk on the Adani Group stocks, I just highlighted some of the fundamental reasons one needs to focus on. While, of course, we all know that there is a panic selling, stocks were down 20%, 25% circuit as well at one point in time. Most of the Adani Group stocks have recovered 8 to 10%, 15% from the lows. But, a few important things to watch out for individual companies now. To start with, first on Ambuja Cement, the current price is around 385, exactly the price at which the promoters bought from Wholesale and made an open offer at. The open offer was at 385. But do remember, the promoters are willing to infuse money into Ambuja at a price of 418 rupees per share. Still, it's below that price as well. So, in fact, intraday the stock hit a low of 350 as well. So, that was kind of a panic from where it has bounced back. So, as far as Ambuja is concerned, that's something to watch out for. We heard the analysts as well talking about fundamentally now it's become attractive. Even Nirmal Mang put out a note in the afternoon, and they have a buy recommendation on Ambuja Cement. Now, coming to ACC, again for ACC, if you look at the open offer price of Adani's, that was at 2300, and the stock is way below 1900. So, even from that point of view, there was a bit of, that's something to track as far as ACC is concerned. Coming to the third stock, which is Adani Port. That stock has sharply recovered almost 13% from intraday lows, and now it's back above 600 levels. But if you look at the Kotak note today morning, they upgraded the stock to buy from AD. They have a target price of 860 on the stock. But from a fundamental point of view, if you look at the valuations now, it is found below 11 times FY24 EV/EBITDA. So that's the reason why you might have seen some bit of reaction or some bit of pullback in Adani Ports in today's trade. And the last stock is Adani Enterprises. That's going to be very, very important to track for the next couple of hours. The FPO starts today, but the price is now fallen below the FPO price band. So the price band is between 3112 to 3276. And remember, the anchor investors have come in at 3276, which is at the upper end of the price band, and they have committed 6,000 crores. So half of it, which is 50%, 3,000 crores will come in. What happens to the FPO is a big question mark. That is something we need to track very closely for the next couple of hours. But that again, for Adani Enterprise, that's an important trigger to watch. And the FPO price band is between 3112 to 3276. So that's broadly on the Adani Group stocks. There were some important triggers to watch, and I guess market have taken a note of it. And from there, you've seen an intraday recovery of between 8 to 11%, 13% in most of the Adani Group stocks.
Okay, got that. Thanks very much for all the details there. So the entire Adani Group, along with, of course, Ambuja and ACC, in focus today. Deven is, of course, still with us. Deven, just moving beyond this group of stocks, want to draw your attention to, of course, the huge fall that's happening across banks. Now, we know that there's been a big rally last year. If you were to buy into this decline, what type of banks or even non-banks would you go for?
Yes, Surabhi. I think very clearly the likes of ICICI, likes of HDFC and Axis would be the preferred choice in the portfolio, along with Bajaj Finance, because most of these stocks have got inherent strengths of business. Their portfolio is widely distributed across retail, across, I think, corporate loan book side, including working capital. And in my viewpoint, I think they are fairly stable as far as I think their business outlook is concerned. So from that perspective too, I would think that I think they are relatively better choice of banks to buy into the portfolio. Current price correction, though it's been very sharp in most of them due to whatever the fear factor that we talked about, I feel that I think they are remaining among the top picks as far as our portfolios are concerned.
Hi Deven, this is Nimesh. Within the Adani Group, Deven, what would be your top picks? Because I just highlighted some important triggers to watch as far as the stocks are concerned. Anything which has become very attractive now from a valuation point of view? Any of the Adani Group stocks, especially the F&O names?
Precisely, Nimesh. I think Adani Port remains, I think, a very comfortable story.
Sure.
Underlying asset base is absolutely strong and convincing. The port business itself is growing. And I think the company is reasonably, corrected as far as the prices are concerned, reasonably giving an opportunity to earn around 25-30% return, I think, without taking too much of a risk. So from that perspective, I think this particular story remains more convincing. Rest of the companies remain, I think, quite good. I agree on the business fundamental side. However, I think the valuation perspective, Adani Port remains more comfortable to me at this point of time.
Deven, if it wasn't for the Adani Group stocks, the stock of the day today have been Dixon Technology and the kind of fall that we've seen. No doubt that the earnings are missed and they lowered the guidance in December and they further brought down their top line guidance. But what have you made of the numbers? And there was so much optimism surrounding Dixon Technology, the mobile opportunity, the PLI schemes. Is this the time to buy Dixon Tech, or what would be an attractive entry point now?
See, that is another problem in the market, that I think when the market is fully convinced about the opportunities, they do not want to listen any kind of negative news. They do not want to listen any kind of corrective news as well. So from that perspective, I think most of the companies, I think, who have been premium traded, which includes Dixon Technologies, I think they are victimized because of that. Having said that part of it, I think the valuation is required to be moderated, which probably I think in this current fall is happening right now. In my viewpoint, I think leave aside, I think, one particular quarter, if overall performance of the company comes back to the normal level, I would say, then possibly in the corrected fall, the kind of companies like Dixon could be a buy opportunity. However, as I said, they are premium valuation. They require to have a little more moderation. Post that, I think one could possibly go for adding them into the portfolio.
Okay, got that, Deven. Thank you very much for giving us all that perspective this afternoon. You have a good weekend and we will touch base with you again soon. The market, nothing's really changing. You're still struggling. Of course, maybe just about a 25 point flip up from the lowest levels of the day, but doesn't really move the needle much, does it? By the way, we spent a lot of time talking about the Adani Group and about banks. The other problem area for the market today is, of course, something like a Reliance. Look at the selling on Infosys, even on HCL Tech for that matter, Lever, all your heavyweights. Basically, not much beyond autos is batting on the upside. It's an all fall down kind of a situation. That is this Friday afternoon. We'll take a very quick break on that note. On the other side, we go back to talking banks. Karthik Srinivasan of ICRA joins and we'll try and make some sense of the sector, the fall that we're seeing today, current concerns and of course valuations. Welcome back. Well, no luck for the bulls really today. It's not that kind of a day. The bank nifty is still struggling pretty much at the lowest levels of the day. 2 days in a row, we've got a 1,000-point decline. Today's decline is almost 1,500 points on the bank nifty. It's a severe downward draft. Of course, short sellers making merry and around all the talk of what happens to banks, how much exposure to the Adani Group and what the numbers are looking like. Abhishek's been looking at a lot of the research out there at brokerage desks as well, seeing what numbers are floating around. Abhishek, that's really important. So fill us in on what you have picked up with respect to the exposure that lenders have to these group companies.
Surbi, to begin with, CLSA has written a note. They say that where does the debt sit for Adani Enterprise amongst banks is what they have written. So most banks have indicated that they have largely financed the secured or those businesses with strong cash flows like airports as well as ports. The ballpark figure as per them in terms of exposure for FY24 is that private banks have it at 0.3% of the loans or about 1.5% of the net worth, while for PSU banks it's about 0.7% of the loans or about 6% of the net worth. Jefferies has also written a note speaking on the Adani Group debt exposure by banks. They say that the consolidated debt of Adani Group is about 1.6 lakh crore. This is X of shareholder sub-debt fund. They say that the debt to EBITDA ratio has actually declined from about 4.3% in FY16 to right now about 3.2% in FY22. So acquisition of cement business will add about 60,000 crore of debt, but it's a strong or it may lift cash flow because it's a strong cash generating business. Diversification of borrowing mix has cut the share of Indian banks to about 33% of the debt or about 0.5% of the sector loans. So they are watching the progress, but they see low risk for the banks given the fact that debt to the group forms about 0.5 to 0.7% of the total loans for PSU banks, while it forms about 0.3% of the entire loans that private banks have. Back to you.
Okay, thank you very much for that analysis. Karthik Srinivasan, Group Head of Financial Sector Ratings at ICRA, now joins it. Karthik, if you just hear the numbers that my colleague Abhishek had put out, it doesn't align with the kind of fall that we're seeing in the banking stocks today. The index itself is down close to about 1,500 points. What have you made of the mayhem?
Yes, good afternoon, everyone. As a rating analyst, it becomes difficult for us to comment on volatility in the stock market side. But given that financials have a fair representation on the index, both are really interlinked. From our point, what we are seeing is the financial health of banks have definitely improved over the last couple of years, and they are in a much, much better position today as, let's say, 2 or 3 years back.
Sure. Karthik, I know, you can't be speaking about individual accounts or individual corporates, but I think within the constraints that you have, if you could give us some sense of concern right now is that, if there is any issue, any outstanding litigation also that starts, whether lenders to the Adani Group will be impacted in any which way whatsoever. Do you think that there is at all a concentration risk, or is the debt very widely held across PSU and private that it shouldn't really become a bit of a hiccup for the financial sector?
And at this point in time, we really don't have the entire breakup of where the debts are held. As you just articulated, a couple of equity houses have made some analysis of the same. But coming back at a sectoral level, the last couple of years, the overall asset quality pain for the system is down significantly. The capital profile has also improved. Most of the banks are significantly above the regulatory minimum requirements on CET. Forget the overall capital adequacy, even on CET levels, they are very well placed. And more importantly, we've also seen a sharp rebound in terms of operating and profitability of banks. So to that extent, banks should be in a position to withstand any shocks out here. And again, a lot of debt would definitely be secured by operating cash flows or other assets. So net, at least at this point in time, we don't see any material shock to the banking sector, at least as of now.
All right, that's good to hear, Karthik. Thank you very much for joining us. Quick comments there on banks and their ability to withstand any potential shocks. We'll come back on banks more. Stocks, by the way, banks at least are, I'm looking at ICICI Bank, for example, pretty much, kissing the lows of the day, sorry, beg your pardon. The low is, 816 or so, and we're there at about 816 point something. And I think similar is the case with a bunch of other large banks as well. 360 points on the Nifty. There's a 30-40 point move which has appeared from the lows on the Nifty, but not beyond. How should you position yourself now in the remaining, 45 minutes or so of trade? Mitesh is with us. Mitesh, coming to you late today, but your reading of the screen, it's of course one way, but how are you, what would you recommend?
So, good afternoon, Prashant. I think a couple of observations. One, earlier we were getting support around 17,800 mark, and then from there we get bounced back to about 18,250. The next time we got there, we bounced back to about 18,150. So broadly, it was a contracting consolidation which broke on the downside as we started trading below 17,800. And the first bounce back was about 450 points. So that gives you a rough target of around 17,350, and then there's 200 average at the 17,300 mark or thereabouts. So 17,350, 300 remains the broad zone which I think the market is heading towards. Though I think there could be mild recovery in the last 45-50 minutes with the intraday shorts being covered. But overall, I think this looks like a market which will head towards at least 17,300, 350 zones and maybe even lower. Because the fact is that with this fall, I think the indicators have started turning negative. So trading with more of short biases in the immediate term, and very clearly looking at a lot of stocks which are breaking down and trying to explore shorts over there, barring a couple of auto names like your Tata Motors or Ashok Leyland, which are still showing good positive strength on the charts.
Okay. Any trades per se, apart from the auto names you mentioned?
So no, I have in fact two short trades right now. Nestle India is something which we had been selling earlier as well, has given a fresh 5-day swing kind of a breakdown. So sell with a stop at 19,250 on Nestle India, and look at targets of around 18,700 to about 18,650 here. The other one is Apollo Tires. That's a stock which is broken key important short-term moving averages, so could see more profit booking led selling over here. I would look at targets of around 295 to about 294 and a stop loss at 315.
Okay, all right. Mitesh, thank you very much. Good speaking with you. Appreciate you joining in with that. Deepan Mehta, Director at Elixir Equities, is joining in. Deepan, coming to you a little later than usual. Thanks very much for joining us. It's a Friday, but not a good one because significant pressure. What do you make of it? How would you characterize the sell-off? Do you think it gets worse, or are you already using this to buy what you like? Because there is a bit of collateral damage as well, unrelated damage as well.
Good afternoon, Prashant, and thank you for having me on your show. I think the biggest problem here is the sentiment, and clearly trader sentiment has been hit by the research report which has come out on the Adani Group. And apart from that, also, I think analyst after analyst, especially the FPIs and FI investors, they have been highlighting the expensive valuations of Indian stocks. And now that is coming into play over here as well. And that's why we are seeing this kind of a risk-off trade as far as India is concerned. But I think what we are seeing here is a shakeout taking place of all the weak players and the leveraged players over here. Stock gradually moving into stronger hands per se. And also there is a compression of the price earning multiples taking place over here because by and large, even on good results, stock prices have corrected, which means the P multiples clearly have gone down, and that provides a bit of a comfort and margin of safety from a long-term investment perspective. And to answer your latter part of the question, I think this is a great opportunity. This correction is a great opportunity to get into good quality growth businesses, outstanding businesses, where valuations have gone a bit haywire. But now I think they may have come back into a reasonable zone. And if further correction takes place from here, then there'll be decent margin of safety as well. So I think investors, especially long-term ones, who are focused on buying good quality, outstanding businesses where there's earning visibility and good corporate governance standards, for them, this is a very good opportunity and they should look at increasing their exposure to equities.
Okay, all right. Hi, Deepan. Deepan, we're talking a lot about all the stocks that are down. Let's talk about a couple of stocks that are doing well. What about PVR? Did you watch Pathan?
No, but looking forward to it perhaps this week.
Yeah, I mean, it's an interesting movie. I did catch it yesterday, and it's quite an action-packed one. I mean, I give it a thumbs up. But Deepan, the important point out here is 55 crores opening. Yesterday, they built on that, and they've still got the entire weekend, to build on to that. Now, that's very, very good news. I think the ratio is approximately 52% between the the producer as well as the PVR. What's your sense? From here on, at around 1,700 rupees odd, everyone had thrown in the towel. Bollywood's not giving us good content. Out of nowhere, Shah Rukh Khan comes in there and bats well. Your view on PVR? The last couple of days, in fact, the stock is up 6%, while the markets are much lower.
See, Nigel, I think it's a good trading opportunity because all of these numbers get reflected in the March quarter, and even the December quarter was pretty decent because of Avatar. But that's going to be the problem area with multiplexes, that you're going to have lumpy earnings. and that doesn't really, kind of enthuse long-term investors per se. And then there's always this fear that entertainment habits are changing, and trying to predict box office collections is more difficult than trying to predict stock price movements. So I would be a bit cautious at these levels. And I think that you can have a trading rally, but I don't see very good earnings visibility 2-3 years down the line. And business per se is quite capital intensive as well, so return ratios are on the lower side. But on the positive side, you have a merger between INOX and PVR. So it's a bit of a confusing picture. And at least I don't get the conviction that it's going to be a great long-term play. So I'm not looking at investing in multiplex at this point of time. There are so many opportunities in other consumption-oriented businesses, in similar kind of businesses like QSR, retail. I think there's better visibility and there's better longevity of earnings over there than perhaps in the multiplexes.
There's one point, Nuvama Research, erstwhile Edelweiss, they've also added another thing which is pro-PVR. They're saying that we see international OTTs cutting their budgets by 30% this year. So this bodes well for players like PVR, right? So OTT was the big competition, and we kept talking about how people are moving to OTT consumption. But if OTTs are under stress and it's a challenging environment and they cut their budget, then again, you can go back to the movies, right?
Guys, I'm so happy that you all have started talking about like the happier things. It is Friday for what it's worth, right? So Nigel, thank you for that turn. It was much needed. In fact, I was going to ask Deepan about a related sort of stock that's actually doing well. Deepan, good talking to you after a bit of a gap, first of all. So great to have you on the show as usual. You might not go to, you might not buy PVR, but would you drive to the theatre to watch the movie in a Tata Motors EV maybe? I mean, look at the stock. The earnings have been blowout. This is one stock that hasn't rallied like banks, for instance. Would you be a buyer?
Good morning, Subhi, and thanks for having me on your show. The Tata Motors is a very complicated company. And just when you expect that the company is not going anywhere and the results will not be that impressive, they suddenly pull a rabbit out of the hat. And that's been the case with Tata Motors. There are far too many moving parts over here. And sometimes you do get a surprise earnings like this. But by and large, I'm not that positive on Tata Motors, because when I compare with what I can buy like M&M or Maruti, I think there's greater visibility over there. With Tata Motors, you're essentially getting into GLR, and then when you get into GLR, you look at the US market, the European market, the Chinese markets, and one geography is doing well, but the other two are doing badly. So it's a bit of a jumble over here, and I don't get the comfort that the earnings sustainability will be there on 3-5 year basis. Whereas I get more comfort when it comes to M&M, Maruti, which are purely domestic focused companies, exciting models, new model launches, long waiting list for them. And operating leverage is coming into play. Commodity prices are pretty much contained. So on the overall picture, when you look at these three companies, I feel that Maruti and M&M score slightly higher than Tata Motors. So I know the stock has rallied today, but I wouldn't look at participating in it.
Okay, all right, Deepan, you have a good weekend, and thanks so much for stopping by. I'm glad we're ending on a positive note. So we look forward to chatting up with you next week itself. By the way, those pullbacks that we've seen the last 1 hour or they've got sold into. Final 30 minutes coming up. Let's see whether or not we get a bit of a bounce from the low point of the day. For the time being, slip into a short break. On the other side, our alpha manager of the day, Thridi Bhattacharya, Fieldwise AMC, will be joining in.
For how long will you continue being tensed about the future? Pension can free you from future's tension. With LIC's new Pension Plus, make your own pension plan, because this plan creates market-linked wealth for your future. Moreover, this plan comes with guaranteed additions and also offers various options for receiving pension, so that you grow young and tension-free. LIC, हर पल आपके साथ।
आज तबीयत ठीक नहीं लग रही, तुम ही सब काम निपटा दो ना। अरे टेंशन किस बात की? सेंचुरी MDF का लो एमिशन प्रीमियम प्लस है ना, हायर डेंसिटी है, वाटर रेजिस्टेंट भी है, यानी ये है जहाँ नो टेंशन वहाँ।
Low emission premium plus by Century ProWood.
CNBC-TV18 presents Mutual Fund Funders.
Direct equity allows investors to make their own investment choices and make purchase, sell and hold decisions. Mutual funds, on the other hand, puts the onus of stock picking in the hands of professional experts. So, what you get is a diverse basket of stocks at a relatively better risk-reward equation.
CNBC-TV18 presents Mutual Fund Funders.
It is time to power your world. Hyundai Ioniq 5, the all-electric SUV.
देखो 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 नया टीवी देखो aha got the veggies from Chotu's shop. He gives the right rate.
Yes, Papa.
Decided 55-inch TV on this wall.
Oh, super. I'll write out the check tomorrow.
No, you don't. I will with my own money.
Oh, wow. How come?
Look at this advertisement. 30% assured returns on investment. I am also going to invest my money.
So vegetables only from Chotu's shop, but investment advice from anyone? Papa, trusting a stranger's advice is never wise.
But what about the TV?
सोच कर, समझ कर, invest कर.
When timeless European design meets cutting-edge technology, it's QO. QO, European bath lounges.
इतनी जल्दी पैसे डबल?
ओ, जमा करोगे तो फिर भुगतोगे। चलो, ऐसी लुभाने वाली स्कीम में पैसे जमा करना यानी धोखे की संभावना। इसलिए पहले पूरी जांच, उसके बाद पैसे जमा, नहीं तो आपके पैसे हो जाएंगे पुर्र। आरबीआई कहता है
जानकार बनिए, सतर्क रहिए।
Okay, we want to first thank our viewers for participating in the CNBC TV18 budget quiz. The question was, this finance minister asked SEBI in the budget speech to raise the minimum public shareholding in companies to 35% from 25%. And the correct answer was C, Nirmala Sitharaman in the budget 2020. And here is today's winner. Congratulations, Prateek Bhavsar. Remember, keep watching CNBC TV18 win prizes daily on the CNBC TV18 budget quiz. Okay, for the markets, there has been a recovery in the last few minutes. The low today was 17,493. For simplicity, 17,500. So from that level, there has been a recovery of close to about 70 to 75 odd points. So that is a bit heartening. The mid-cap index too is now down 500 points. It was down far more some time back. Let's invite Trideep Bhattacharya, the Chief Investment Officer, Equities at Edelweiss AMC on the show now. Trideep, I remember our last conversation where you said that in this earnings season, the earnings upgrade cycle is going to be tested. What have you made of the earnings so far? What was your thesis? Has it played out as per your expectations?
First of all, thanks for having me on your show. I think one of the things that we have been talking about since the beginning of this year, in terms of one of the themes for 2023 would be, recession before rebound. In the sense, globally, we are likely to face recessionary conditions before rebound. And one of the drivers of that has been the quick succession interest rate increase of close to about 500 basis points that we have seen globally, and will now flow through the economies, to various economies in different degrees in the first half of calendar year 2023. What I said to you earlier was in a continuation to that in the context of a rate headwind flowing through the economy, the earnings upgrade cycle is likely to be tested. And I think if you look at the earnings that have come so far, I would say that the pockets of growth or the pockets of beats have been certainly narrower and more pointed. And generally, the commentary has been probably kind of, cautiously optimistic, throwing a bit of caution more than optimism so far. While some sectors have reported good earnings, some have reported some meaningful misses, like probably one we saw today or the last couple of days.
Hi, Trideep. Nigel on this side. Trideep, private sector banks was something that you liked. Now you're getting some of these stocks, at a sharp discount to what you would have got it a couple of weeks or so ago. And ICICI Bank has broken its 200 EMA today. Your view on the banking names, and from the stocks that you have, what's the pick of the pack?
So my sense is that, two bits. The first bit I talked about in the first half is going to be fairly volatile. So, and hence we have to take some of these movements that you're seeing in share prices. That will happen quite a few in the first half of 2023, and investors should be prepared for that. But that being said, from a 2 to 3 year perspective, I will continue to be positive on some of the private sector banks. And over a period of the next 6 months, we would look to use these declines as a way to sort of enhance our position wherever there is a scope, particularly in some of the banks where the earnings momentum is robust. And the reason why we like this is because after 2 to 3 years of bad asset cycle, we are now turning around. The corporates are more deleveraged, and credit growth is gradually picking up over a period of last 12 to 18 months, and that is probably likely to continue, over the medium term.
Got that, Trideep. Good talking to you today on the show. Let me ask you how you're playing the consumer. I mean, we all know that, and especially on the discretionary side, whether we are talking to hotel companies or, even some of the numbers like, stocks like Shoppers Stop, etc. The consumer is alive and kicking. We know that. We know that in retail loan growth as well, for that matter. So how would you play this part of the market?
So we have been and continue to be underweight the consumer as a basket. And when I say as a basket, I mean including consumer staples, consumer discretionary, and further up the discretionary chain, which would include hotels, this and the other. We have been underweight this space for a good 6-9 months. I think historically, the change in color within the consumer sector has been historically the pocket of growth within consumer has been the urban demand. In my opinion, over the next 6 months, you will see that growth also taper down to a certain extent. While rural demand might see some semblance of growth, not exactly a huge rebound, but some semblance of growth. And partly that is driven by, the whole impact of rate increases that we talked about, and the commodity price increases, which have been passed through by the companies to the consumer. All of that impact will flow through in the first half of calendar year 23. So as a starting point, we are reasonably cautious within consumer. Within consumer, we are probably incrementally tilted more towards staples than discretionary than what we have been in the past. That's our thinking at the moment.
Okay, so you're underweight consumer staples as well as discretionary and the entire gamut of hotels, airlines, because you believe the urban demand, which was strong up until now, will start wilting with the rising interest rates. Where do you stand on IT? Here we're getting some mixed opinion. Many believe that it's still going to be, weak for the sector in 2023. Some believe we're closer to the bottom or at the end of this downward cycle that we've been. Where do you stand on IT, and what would be the big triggers for IT from here on?
In my opinion, the worst point of uncertainty has been roundabout is something that we are going through right now. And if I divide the sector from a outlook standpoint into two parts, P multiples and earnings overall, I would say that the sector over back half of last year went through a good round of PE derating. So the PE derating part is reasonably complete. Earnings calibration versus how the demand might turn out to be in calendar year 23, the current calendar year, or FY24 for most of the corporates is currently underway. And I think over the next 2 to 3 months, you will see a reasonable amount of clarity in this area as well. So with PE derating done, earnings being recalibrated, we have reduced our underweight in IT over the last 3 to 4 months. We are still selective. It's not that it's one of the most overweight sectors that we have, but incrementally we have reduced our underweight, and we have probably increased our weightage over the last 2 to 3 months in this area.
Okay, got that, Trideep. Thank you for joining us and giving us perspective on the markets today. Great talking to you. As always, the market actually is trying to fight back. I mean, to some extent, for what it's worth, about a 100-point recovery from the lows of the day. Just a quick take on some of the stocks that are trying to fight back. Actually, it's Infosys. I mean, the likes of Dr. Reddy's anyway have been positive. L&T is trying to, really pull up from the lowest point of the day. So there's some sort of pullback as is quite evident. Perhaps some semblance of short covering also coming through. A little easing of the pressure. We'll take a break on that note. And as always, we'll get you the calls for tomorrow, rather Monday this time around, with the technical experts in just a bit.
Welcome back to Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, the markets have staged a bit of a recovery from the low point of the day, so that's good news. We said it at the start of the show that you don't rule that out happening, right? And it's happened. But I think, the real trend will change only once we get past that 17,750 odd mark. Mitesh Thakkar is back with us. Mitesh, your sense on the index as well as a couple of trading calls?
Angel, I think the overall bias remains weak. Though I think I also highlighted that the fact that there could be some last 1 hour short positions covering. The intraday shorts will cover it's a weekend as well. So I think you'll have about 2-3 days of news flow which can happen, and therefore I think some short covering was expected. But I still believe that 17,350-300 is the area which the Nifty will be heading towards in the next 2 to 3 to 4 sessions. Having said that, I have one buy and one sell. The auto pack is looking very good, led by, of course, Tata Motors, but Bajaj Auto has also given a good breakout, and the overall setup has turned very positive here. So BTSC on this one with a stop at 39.15 and a target of around 4,000. And on the negative side is IndusInd Bank. That's an STBT kind of a call. Take a stop around 11.30. Look for targets of below 1100 for Monday.
Okay, got that, Mitesh. Thanks very much for the calls. With that, let's move to an important number that will come out today. I'm talking about, of course, third quarter earnings. Bajaj Finance is going to be in focus, and everyone's looking at this stock, right? Given its massive underperformance for several months now. Can they come out with something that really, kind of excites the market and changes the mood around this time around, Abhishek?
Well, Surbi, strong earnings momentum expected by analysts on street. The already business part is known. A fabulous customer growth over there. However, AUM growth has moderated, unlike other times wherein Q3 has been pretty strong. So the new loans are at all-time high of 78 lakhs, up about close to 15% quarter-on-quarter. The customer base, that's been pretty robust, growing at 19.1% YOY and close to 5% sequentially. Historically, festive season has meant that, Q3 for this lender has been pretty good, but this time around it's on the weaker side in last 4 years. AUM growth has been pretty healthy, but it's tapered down from their actual growth rate of more than 30%. It's come down to 27.5% YOY and about 5.7% sequentially. Sequentially, analysts were working with a loan growth of around 7.5%, so it's disappointed over there. Average ticket size almost flat on a sequential basis. The deposit momentum has been strong for this lender. So watch out for the net interest margin, which is expected to decline both YOY and quarter-on-quarter. Asset quality will improve, provisions will come down, which will aid the PAT momentum. A robust PAT growth estimated by analysts about 40% YOY growth and about 7% sequential growth. Watch out for management commentary with respect to future outlook and business momentum target that they give out. So our poll suggests NII growth of 22% on a YOY basis and about 4.5% sequentially, while we are working with a profit growth of nearly 40% YOY and about 7% sequentially. Back to you.
All right, that's a big number. And as Abhishek said, the business numbers were all known. The stock did sell off very aggressively once after that pre-quarterly update. And this is, and I remember this had happened a few years ago as well. And the pre-quarterly update resulted in the stock coming off sharply because AUM growth moderated. And then on the conference call, the management came and said, well, this is exactly what we wanted to do. So this is like a very guided slowdown. Got it. We've got a handle on the situation. This is not, we are not left to the vagaries of the market, but this is planned. And the market took it very well. So let's see if we hear something like that on the conference call after the numbers come through.
Okay, that's Bajaj Finance. The Q3 business update had come on 5th of January. At that time, the stock price was more than 6,500. There was a precipitous fall on that day and the stock went below 6,000. That's on 5th of January. And since then, you can see it's only been grinding lower and lower. And now at 5,766, it's 25% lower compared to its 52-week high. Independent market research, Ambrish Baliga is also with us now. Ambrish, now across, very different sectors, you are hearing that the spending was low in the festive season. Team Lease is a company that I track, and they also indicated that the hiring for the non-IT sector was also weak because of the festive season spending being lower than what they were anticipated. And we've heard this from so many other, different sources as well. Your thoughts on BFSI? Your thoughts on Bajaj Finance? And do you think there could be anything in the earnings which could lift up the stock? Or do you think most of it, the cat is out of the bag?
No, I think the issue with Bajaj Finance would be expectations versus delivery. And expectations of the analysts are still quite high. And I think that is what will spoil the day for Bajaj Finance. And anyways, I've been talking of like a slight bit of a slowdown as far as Bajaj Finance is concerned since the last at least 3 to 4 quarters, because what they did earlier was disruptive. But now, because the expectations have been going higher quarter on quarter since the last, at least if I remember right, possibly about 20-25 quarters, they really can't keep, beating the expectations all the time. And somewhere it has to top off. And that's what we have seen now. So, I surely will not recommend even a buy, even after a crack like this, what we have seen in the past 1 month. I think it can still go down further, especially in case the earnings are not up to the expectation. We can still see a further fall.
Okay, all right. Hi, Amrish. As we speak, the markets have staged quite a good recovery. So the bulls will be feeling good. At least we have bounced 130 points from the low point of the day. But it's not just the headline index. Just take a look at the broader markets. A couple of stocks, well, they're off to the races. Oil India, big U-turn out there. Pull up the intraday chart of Oil India. You'll see that stock has moved to the high point of the day. PVR, the Patan Power is really working out there. Stock is up 5.5%. We were chatting just around 10 minutes or so ago. The stock was up 3%. So that's staged a good fight back out there. And United Spirits, it's a Friday. That as well has moved into the green. So just keep an eye out on that stock. Amrish, there are select stocks that are doing well. And we have seen this in the past. When the markets get a little bit jittery, it provides good buying opportunities. You're looking at Bata, I believe. Tell us more. Tell us the rationale.
In fact, it's a bit risky giving a buy on a day like this. But again, this is a long-term buy. And a crack which we have seen today clearly is a buying opportunity across not just Bata stocks. So coming to Bata, it's the largest retailer and leading manufacturer of footwear in India across various segments, right from men's, women, and kids. And now they made a major foray into sneakers, targeting the millennials. So their average age of buyers has started coming down quite sharply. The reach also, should improve with the distribution network across about 1,100 towns versus 966 towns last year. And they have close to about 2,000 retail outlets, expanding into Tier 3, Tier 4 through the franchisee route. And if you look at Q2 revenue, that's gone up about 35% Y-on-Y, both because of volume and price increases. Gross margins also have moved up by about 210 basis points to about 55%. And looking at the balance sheet, quite healthy with decent cash, a negative working capital cycle. They paid a huge dividend last year to utilize the cash. If you see the last 5 years, we have seen a 20% CAGR. And now in the last 2 quarters, we have seen the input costs also starting to soften. So I'm looking at an EPS of about 38 for FY24, giving it a target price of about 1,900.
Okay, all right, Amrish, stay with us. Just coming back to you, there is 8 minutes to go for markets to close. Amrish's pick Bata, as he explained, 265 points is the recovery we have on our hands. So this is looking pretty decent, all told. I think there are these Adani names have also recovered. Adani Transmission and Green are still limit down 20. Enterprises is down 18. Ports is the one which I think has come up a little bit in the last, 15-20 minutes or so of trade. Now, we learned from sources that there has been no panic at LIC, Life Insurance Corporation, on the move in the Adani Group stock prices. Yash is here to tell us what he's picking up. Yash, over to you.
Well, Prashant, LIC as an investor is known to be invested for long-term. Trigger selling, trigger buying is something which does not generally happen in LIC. But on the Adani issue today, we had a word with a couple of sources at LIC, and what we've been given to understand that they've been following the same pattern. No trigger buying, no trigger selling. There's no panic at LIC when it comes to their investment portfolio in Adani Group stocks today. But that does not take away from the damage that it has done to LIC's investment book as far as the fall in Adani stocks is concerned. Total investment value lost for LIC out of its investments in all Adani Group stocks is concerned. That stands at about 16,000 odd crore rupees. Yesterday, as per yesterday's close, the total investment value was 76,000 crore rupees. Today, it's at 60,000 crore rupees, so a fall about 16,000 crore rupees. And we've taken this value as per the intraday low today on various Adani Group stocks.
Okay, got that. Thanks, Yash, for the details over there. So different market constituents obviously are very carefully watching what has been transpiring on the screen today and actually the last 1-2 days as well. We'll take a break. As we do that, here is some exciting news. The most coveted leadership awards are back. CNBC-TV18 honors the visionaries behind outstanding businesses. Catch the most influential, credible, powerful IBLA jury on February the 8th, right here on CNBC-TV18.
Okay, you got the market, which is, ending on a pretty weak note, with 17,620. But off the lows of the day, the low today is 17,493. So it's a 120, 130 odd points bounce from the day's lowest level. The two levels, were broken. The two important long-term levels were broken. One was the 20 weekly exponential moving average was broken intraday, and the 61.8% retracement of the move from the October 2022 lows to the all-time highs was also broken. But the closing is above these levels, not very much, but it is above these levels as we wrap up this Friday and wrap up this week as well, guys.
Well, it's the Adani Group stocks which have taken it on the chin. Adani Enterprises 18% down. Adani Ports off the lows but still lower by 15%. Adani Green 20%. Adani Transmission lower circuit of 20%. So even Ambuja Cement, ACC were now the Adani Group, which the Adani Group now controls, are losing in trade. Banks underperformed. The Nifty Banking Index was down 3%. Between 2 days, Wednesday and today, we've seen the Nifty Bank collapse by more than 2,500 points, with names like State Bank of India, ICICI Bank, IndusInd Bank amongst the big losers. But it was not all red on the screen. You had many auto names like Tata Motors, Bajaj Auto reacting to good set of earnings. A couple of these pharma names, Dr. Reddy's Cipla ended up with in the green, with Dr. Reddy's up 2.5%, Cipla gaining 1.5%, ITC2 up close to about 2%.
Yeah, so really a down day, but some attempt at a pullback, 100 points sort of recovery from the lowest levels of the day. And perhaps a little bit of a movement on the auto side, Rima, as you mentioned. Dixon, of course, down about 18%. All in all, down. Can't say not out. It was actually out as well. But that is the market this Friday. We have lost around a little over 2.5% on the Nifty this week, but well over 5% on the Bank Nifty. Tough 4 trading sessions. Well, with that, it's going to be a wrap on this edition of Closing Bell. It's a goodbye from the entire team that puts this show together. But don't go anywhere, because our Friday special Smart Money is coming up next with Sonia.